I mean, one exciting thing that we've just announced is our assay results for 9 of the 18 holes. That's half of them. It came out. People can review them as they wish. Some great grades there. The best hole was hole number 5, 7.5% over 1.9 meters. And there's a cross-section provided in the press release, which I think people can look at. They can look at the 3 historic holes. The 4th hole is that hole number 5 at depth, around 200 meters. You can visually line it up. You can see that we're adding pounds. So we're saying we're doing what we say we're going to do, which is grow the resource. Obviously, that's the best hole. Some of the holes weren't quite as good, but still adding resource. So again, our plan's intact for next year, drilling again and update the resource at the end of next year. And that really delves into why we as a company and the board decided that we should raise a little bit of money, raising between 5 and 6 million. It really de-risks next year's plan. And so, we've got a plethora of targets. We could be drilling at Angilak for an easy 5 years without any new exploration. It's just a question of money and how fast. So at least with the 5 or 6 that's going to come in, we will have a budget for next year. We'll be drilling and we'll be updating the resource at the end of next year. People will be able to see and touch how, if they want to model it themselves, they consider themselves a good geo, let them go at it. All the information's there, including the azimuths. And if not, they can wait till the end of next year, roughly around this time next year, and we'll be updating the resource so people can see that growth from the 43 million pounds.
Okay, so I get this. I saw the headlines. Obviously, 7.54% over 1.6 meters. So there's some dazzling high headlines. Some of the holes hit, some not as well. But I'm trying to. Can you break it down and you say that's why we're raising the $5-6 million dollars? It's going to do what? Is it just purely for increasing the size of the resource? And do you think that's going to be enough of a message for the market to be able to go and either sell this thing or continue to raise money to drill this thing out? I mean, I'm not quite sure what's working in the market at the moment for people. As opposed to just sitting back and doing nothing. I mean, so what's the thinking?
Yeah, I think there's an increasing realization in the market that, yes, the price is going up, and is my view, it's a 5 to 10 year bull market in uranium. What the price is going to when, I don't know. I'm not sure anyone knows, but it's going up. But I think investors' attention is turning to, rightly so, okay, that's great. The price is increasing. You said before, you needed $50, you need $60. Well, it's at 70. You said you needed 75. So what does it look like? How are you going to capture that? And if production if there's no, although it might be 5 years away, if there's no tangible path to production, the future cash flows, which you have to show at some point, getting discounted back. If they're too far away, they just go into never land, and people just can't. People aren't. They're probably not going to believe you, and they probably, you're not going to get value for them in today's market. So, by drilling this year and by drilling next year, we increase the size of the resource. It keeps our options open. If somebody wanted to come in, I think Angilak is well positioned in the sense that one of the things we talk about at the board level, if we do, as you say, we drill next year and we increase the size of the resource and we demonstrate that to people, we've done what we said we've done, and the market still yawns or doesn't care, well, one option, in our little quiver, we don't have many, but we have a few arrows back there, is to produce a PEA. We could do that. It'll show an NPV of whatever. You can take a discount on whatever, but it's going to show something quite more than what we're trading at, that's for sure. And we can actually demonstrate to people a path to production. We have 43 million pounds today. If we stopped everything and you forgot about all our drilling today, an easy scenario is something like this. It's all an inferred today. Give it a serious haircut down to 20 million pounds. Cut it in half. Cut it a little bit more than half. Put it to reserves. Fine. What do you have there? You have about 1.5 million to 2 million pounds a year. Is it gonna scare Cameco out of its boots? No. Is it gonna upset the world uranium market? No. But at say 2 million pounds, think of it at $50. It's a $100 million business. Again, is it gonna shake the world? The uranium world? No. But is it gonna be a profitable business with a high grade mine? Absolutely. We could do that today. Permitting and money notwithstanding. But that we could have a plan for that today. And again, if we grow it even larger, that plan just becomes, you just increase the size of what you're talking about. So it keeps the options open.
It does. I mean, the bit that interests me is you've got so many new entrants coming into the space because uranium's hot. It's the thing which is kind of bucking the market trend with this sort of creative growth in the it's not even accretive growth in the uranium price. It's up to $74 again. And compared to $25 2 years ago, that's meaningful. But how do companies like yours play this? I've talked to enough CEOs, asked them the question about what's the difference between your company at $54 versus $64 versus $74. They don't know. They don't know how to take advantage of that. So how do they take advantage of that, given they're not going to hit this? These are explorers, right? I should say, given they're not going to hit this cycle in terms of production. So how did they frame it? How do they position themselves? What's the narrative?
I guess, in terms of our spot, we haven't pinned ourselves in. So if you take two ends of the development spectrum, if you have a PA or better, you have some numbers out there, and the numbers are the numbers. And, a lot of people have been saying with projects like that, oh, when the uranium price gets better, we need a price of X or Y. And when that happens, then we can start moving this into development. Well, I don't want to talk bad about other companies, but generally speaking, all these companies are realizing, and investors, I think, are realizing, regardless of what the companies are saying out of their mouths, is that you actually need a little higher price, or maybe even materially higher price. So the developability of these PA or better projects is now starting to be discussed. And if you're at sort of the other end of the development spectrum, if you don't have a resource just yet, maybe you don't have quite moose pasture, but people are like, well, how far away are we here? And are we, again, I think investors are taking a little bit a page out of the gold book, because the gold's been around for a little bit longer. In terms of an industry, in terms of participants and people being able to do things. And if you take a little bit of a step back from just the uranium market, you say, if you wanted to develop your own mining company and you want to develop on a sustainable, recurring basis, hiring people, not just a stock promote, what does this company look like? Well, what it would look like is you'd have an asset in production, so you have cash flow. You'd have this suite of assets coming down the pipeline. You'd have something at the definitive fees or pre-fees stage that's sort of to be ready to build, which is your next project. You'd have something maybe in the late resource or PEA stage, which is 2 to 3 years away, depending on permitting and that. And maybe you'd have some pre-resource stuff coming before that. That way, when you have a pipeline, you always have something, you always have growth, because, when I worked at Semifo, we were a gold company. We were in West Africa producing 400,000 ounces. Every single year you produce 400,000 ounces. That's great. You have cash flow, but every single year you have to replace those ounces. That's just to get back to, net ground zero. If you want to grow, you have to replace that plus that. And so think of someone producing 5 million pounds of uranium a year. Great, you're in production. Well, you have to produce at least that, and if not more, to grow. And that, in an industry, in a profitable basis over time, is quite difficult. And so I think investors are starting to sort of realize that value dynamic. And, so what I believe is Angilak is properly positioned, because, again, we haven't pinned ourselves in terms of producing a PA, because the problem is that if you produce a PA and it's really a sales document, well, that's great if you can raise money off it, but most times you can't, to be quite honest. And if you produce a realistic one, people are sort of humming and hawing at it. The companies like it because it's a realistic view of what the future holds. And so you're sort of, as an independent single asset company, you're sort of betwixt and between about what you do about this. And that's one of my reticent points about actually making a PA is, on the one hand, you want to make it realistic to add credibility, but on the second time, you're sort of proceeding yourself down a path. And once you start down that path, it's incredibly difficult to reverse course, because you're setting expectations in the market, and you either have to fulfill them or fall on the sword, because someone else coming in looks at it and goes, well, we can't buy it at this price because you've created all these realistic expectations. It's not up to us to reset the market. It's up to you, unfortunately. So I think, whenever you proceed down one of those paths, you need to do so thoughtfully. And we're just, that's why we're still a year or at least a year away from figuring out what to do about all this. But, in terms of a project, Angilak is very nicely positioned right in the middle. It has an existing resource. We could have a PA. Anyone could do a PA in the project if you wanted to. You don't need to be a uranium analyst. You could be just a general mining analyst. It's a subvertical, structurally controlled, 2 meter wide, 0 to 300 meter vein deposit in hard rock. Lots of analogies around there in terms of OPEX and CAPEX. You can beaver away at it. And we haven't produced a PA yet, so people still don't know it. And we haven't set any unrealistic expectations about what the future holds. So that will all come to roost for us next year. Again, if we do what we say we're going to do, and we drill and we grow the resource and the market rewards us, fine. That's great. If they don't, well, we still have a few arrows in the quiver. Economic development. Again, I think behind the scenes, the uranium industry is finally or the investors' sentiment is finally coming to roost at the corporate level. And so a lot of companies are talking about how they arrange themselves. Even the producers are like, the Camecos of the world. That's great. You can have the best projects in the world, but these, by definition, mining is an extractive industry, and there's always a wall. You can debate when the wall is. It could be a year away, it could be 20 years away, but the wall, you always have to be conscious about where the wall is and bring these suite of projects into your pipeline to manage that wall. That's why investors like 20-year mine lives, because the wall is farther out. And that's why Angilak, I think, is going to appeal either to the public markets or to a corporate, because that it can be easily slotted in, and it's got maybe a 3 to 6 year time frame to production, depending on how quickly you want to focus on it. If we're independent, we'll have to go a little slower because we just don't have the monetary firepower up front. And if you're a corporate and you want to do it, you could probably do it in 3 years, but you have to sort of get at it, crack at it, and put a budget behind it to get the permitting done and get the drilling done and all that stuff. So, but it's think of the projects that are realistically out there in the world in uranium that are developable in the next 3 to 5 years. That list is not a long list. In decent jurisdictions. Yeah,
look, it's not a long list, and even some of the ones that are on our list, you've got to perhaps question the real and true economics of. But that's a subject for another day. I think what's interesting to me is the way that you kind of view the parallels between the gold market and the uranium market in terms of how you set yourself up in terms of backfilling all of that resource and reserves. I understand that. But for companies like yourself, your strategy, just to be really, really clear, is simple. We're going to build this resource out, all categories. You're saying there's no point of focusing in on M&I. It's like all categories, because it's easy to do the maths at a later date if you're a corporate, or it's easy to do the math if there's some suggested M&A activity, rather than you go through the cost and time effort of doing an economic study at this point. Is that what you're suggesting?
That's exactly the plan today. I mean, we already have world-class grade at 0.69. Our investor base has said, listen, you've got world-class grade, let's make it world-class size, which in their minds, roughly speaking, is around 100 million pounds. It's not right or wrong, but it's a number, because if you did the math at 100 million pounds, assume some conversion, you've still got a north of 5 million pound deposit with good grade, and that ranks, go to the WNA website, that ranks in the top, if not the top 5, the top 10 deposits worldwide. And I'm not suggesting we're getting there tomorrow, but we're not far away. We're at 43 million pounds in a deposit that's been around for 50 years, in an area that's got uranium all over the place. It's just north of the Athabasca Basin. It's it's got all the checklists. If you're a corporate and you're looking to get something into production in a reasonable fashion, in a reasonable size, you can actually have a pathway with real timelines and real steps on it. You need money to execute it, but there's not many projects like that out there that you can actually do that with.
No, you definitely got the scale. You had the scale when you took it on board, and obviously now raising the money to actually go and then build that out and see where you get to in terms of this 100 million pound target. It's tough out there. I think it's a bit easier for uranium companies out there. Do you expect the market to give you what you want? Do you think you're going to get the price that is fair and reasonable, or it is? Yeah, what's your expectation around this when you're on Bay Street, wherever you're going?
Yeah, it's a tough one. It's a tough one because really, before the past, really when uranium was sub $50, this discussion wasn't happening. But now the discussion is, I think people are starting to appreciate. There's sort of what I call a North American mentality, and there's an Aussie mentality. The North American mentality in uranium and other spaces is grow the resource to its maximum size, and then we'll figure out what the development scenario looks like. Whereas on the complete opposite side of things, the Aussie mentality is more forget about growth, get this thing into production ASAP, and we'll worry about the growth later. They're very diametrically opposed philosophies. And to answer the question is, I think a year ago, at least we were, and our investor base was in the North American mentality. And I think with the shifting tides, are we in the middle somewhere? I don't know, but the tide is shifting, and it could shift over to the Aussie mentality, and we have to shift our strategy to align with it. And if that happens, that's great. So we're monitoring it, but the problem is, I'll compare it to gold again. In gold, you have 15 to 20 major investors around the world, and you can proxy a view and get a view fairly quickly. And if you need to check that view, you can go check. In uranium, you just don't have that breadth of publicly available information sources. So you have to sort of do it a little bit manually, a little bit sort of reading the tea leaves a little bit, so that it's not a perfect. You just don't go to a website and sort of click a few buttons and get your answer. You have to do it a little bit manually. But I'm sensing the shift away from the North American mentality a little bit. I don't think we're quite to the Aussie side of things, but we're not quite sure we're exactly in the middle. But we're getting towards the middle, so we monitor that, and because our strategy has to evolve as the market evolves, because we can't just stick our head in the sands and hope for the best. We have to react to what's going on.
I agree with you. The conversations I'm having with gold companies, North American gold companies, exploration companies, certainly, is we can't keep repeating the same stuff that we've been doing. The definition of insanity, right? Expecting a different outcome. Right now, the mood, I think, for gold has changed to that. Let's work out how we can get into production earlier. Let's work out how we do it on a smaller scale rather than a larger scale. Get it flowing, non-dilutive capital, which our shareholders will hopefully value us for, and maybe it makes itself attractive to potential buyers as well. So there's lots of you're right. It's a changing mentality out there, but it's out of necessity rather than habit. At the moment, it seems. So just on the money raise, when do you expect to have that closed, and when do you expect to start actually allocating that capital?
Yep, should be before the end of this month. It'll be all closed up. So going into year end, we'll know what we'll have. We can set our budgets appropriately, and don't forget the drill season won't start until sort of late May, early June, because of the weather. So we've got time to sort of go back and think about what we're going to do and how we're going to do it. So we've got time, not infinite time, but we've got sufficient time to do it in a thoughtful fashion.
Right, and also we've talked about risk in the past. You also you got twin assets. You got the project CMB over at Labrador. How are you feeling about that in terms of optionality? If you're able to raise money easily here, I guess you're under no pressure to offload assets. If it's slightly more difficult, what are your considerations? What are your options available to you?
Yep. On the CMB, the interesting thing will be the two pieces of news coming out to the year end are, one, we're going to have some geophysics on what the property called Mustang Lake, which is on trend from Paladin's Michelin deposit. And we'll see what that demonstrates in terms of potential drill targets. Could be interesting. And then we're doing the property-wide gravity survey over the entire 125 kilometers, looking for uranium occurrences that we were unaware of, and this potential IOCG target. So depending on the results of those, Mustang Lake should be out within a month, and the larger survey towards the end of the year. But depending on what if those surveys show nothing, I guess that's we crack on. If they show something very interesting, I guess it's back to the investors. It's like, what would you like us to do with these things? You want us to, these are big company type projects. So sure, we can, 2-3 holes in it, fine. But there has to be some end game, because we're not going to be developing an IOCG target on our own forever. So let's see what we get, and we'll figure out what to do or what not to do about it.
Okay, Brian. John, I appreciate the update. Let us know when the money comes in, and we'll see you real soon. Okay.
Sure. Thanks, Matt.